catching fire. I just feel so fine with this fire, this fire, this fire.
Alright guys, we're about to start. Let's just wait 2 more minutes and we'll begin. While we wait for some confirmations here. Enjoy the music. It's 4 o'clock and 18 minutes where I am now. Been an incredible week over here and we are about to go live. We're actually live, I guess. Wonderful. Alright. Yeah. Alright, we got our setup ready. Everything looks pretty decent. We got our accounts stocked, segregated some money over there, and we are about to start, guys. Now, welcome once again. Welcome everybody. Welcome wherever you are from, wherever you're tuning in from. We have a live chat. Make use of that. Traders, investors, data lovers, you know, whatever industry you're coming from, welcome to today's live, well, I want to call it non-farm payroll trading session, but we actually have some more data coming in from the employment change, Canadian dollar, so we'll be also looking at that. Yeah, you're most welcome. I'm your host, Tony, aka Tony Trades Pro, and today we're diving into one of the most market moving events, I'd say, in the financial markets for scalpers, for all kinds of gamblers, people that are just into this for a quick buck. I highly advise people to stay away from these sessions, or to approach them with a lot of skill and experience and practice. We're not here just to make money, but we're here to learn as well. So the US jobs report is a very important event release that happens once every other month. And but before we dive in, a quick update, right? if you've noticed, there's a quick time change here, right? If you've noticed, every session now feels like a little earlier or a little later than usual. And I got so many questions this week why that happened, and I just want to explain that briefly. That's what we call daylight savings time, all right? And that just ended in the US. As you can see, here are the timings, depending on which location you are from. The link is all in my Telegram channel. You could go check that out. And here's pretty much what happened. So twice every year, the US and parts of Europe, they adjust their clocks by 1 hour. Most of you that are new here, especially the ones in Asia and Africa, and you might want to know this as well so that you don't get caught off guard. Now, we have spring forward in March and we have a fall back in November. Why do they change this? Originally, it was meant to save daylight and energy, giving people more evening light than after work. But now, traders, for us traders, this means New York and London temporarily shift by an hour. So if you're in London and you're in the States, it just shifts by 1 hour, which affects session overlaps. So this is key. Our session overlaps are very important because, as I've previously mentioned, we are looking at these sweet spots. We're looking for momentum and volatility that is trickling in every session, and it's very important to tap into that. And yes, of course, timing of releases like NFP and unemployment change are also affected. Now, just a reminder that our trading schedule remains 8, 11, and 14. That is UTC time, coordinated universal time, right? And if you go to this map here, you could, let's see, where is it? Yeah, we have a time zone map here as well. You could just simply check where you are, which area you're in, and get in sync with my community. All right, now having that said, I think in the UK it's GMT +1, and in New York it would be GMT -4. That is a quick note. And we're trading in the sweet overlap where liquidity is at its finest. We don't want to trade in slow, boring markets. That's if you're a scalper. If you're holding for longer hours and longer periods, then I mean, that's a whole different other ball game that we'll look into later on. Before we get into the charts, ladies and gentlemen, use the promo code TSTREAM on Pocket Options for 100% deposit, right? Double your capital to trade today's volatility, for example. The link's in the description. Grab it now or right after the stream. All right, family. Let me make today count, all right? Let's understand, all right? Let's try and anticipate, I like using those words, and trade the US jobs data like pros. Now, this is not my first live NFP. If you go check, I've been doing this for the past decade. Those are 10 plus years. And I've been sharing a lot of insights on how to trade it. Many people out there seem to know what they're doing, but unfortunately, majority are doing it wrong. And I'll show you why and how. Just try to follow me and ask questions where you find complications, and I'll be glad to help you guys. Now, once again, let's start from the foundation very quickly. We don't have a lot of time, depending, I don't know, some tentative data. Apparently, due to the shutdown, if you read this little precaution here, US government data may be impacted by the shutdown. So tentative events are subject to delay, revision, or cancellation. That is why I love to use the official US Bureau of Labor Statistics. For those of you that are the advanced group, I have integrated artificial intelligence to some of these fundamental news releases, and that is for another day. I'm trying to relate with the public here, and especially novice traders and intermediate. If you know you've been here for a few years, you might want to check that other realm later on. Now, what is NFP, guys? What is NFP? This is just this is a non-farm payroll report, right? Why do people go insane when it drops? What is so special about it? You see, this measures the number of jobs added or lost in the US, excluding farm, government, and a few seasonal sectors. Okay. Now, latest releases, you want to keep an eye on that. Let us see where that is. So once we have, in about 3 minutes, we should get some data coming in, hopefully. So here's the key. It's not about the number itself, the number that comes out, right? It's not just about the number. It's more about what the number means, okay? What does it mean? We have interest rates. How does it affect inflation? What are the Fed's next move? Alongside NFP, we've also got unemployment rate and employment rate. Unemployment rate simply tells the labor slack or strength, while the average hourly earnings shows wage inflation and the invincible driver of CPI. I mean, we've looked at all this. There's a lightning cheat sheet that I have for my subscribers. You might want to check that up. I have it clearly. You could print it out and stick it on your dashboard or next to your working trading desk. And you could see the indicator, the meaning, and what actually the market impact, what it has on the market. NFP going high, unemployment going low, etc. So when all three are strong, all right, USD simply rallies, gold drops, indices slide. While on the other hand, if they are weak, we should be getting it now. If they're weak, simply means USD tanks, gold flies, and indices rallies. Now, a very important one, you want to keep an eye always on the alt coin index, having an idea of what the crypto space is like, what's happening over there. For those of you that are heavy into crypto, Bitcoin, and whatever you're trading over there, it's just important to have that background information. And definitely stocks as well. You have to keep an eye. Today I'll be sharing some insights on the martingale strategy and how to actually input this data, how to follow through, and we might have a few trades. You want to stick to that as well. This is free. I have a copy for you pinned in my Telegram community. Amazing. If you're around, just put a plus, write a comment, ask questions, feel free. This is an open space. Now, we might be getting some volatility coming in at the moment because the data is coming in right now, and I'll explain. Now, we have pending, all right, pending, and we should be able to get some news releases here. So far, we have consumer price index, major economic calendars. Where is that? All right, you might want to play around with this website. Something along the lines of a shutdown was earlier mentioned, and that could be one more reason why we don't see this data today, because okay, we've got positive data for the employment change for the Canadian dollar and unemployment rate. This is a good sign because you could see price movement going down already. All right, if you check Canadian dollar, we should be able to see some price moves. Now, the reason I'm showing you this is not so you react immediately. Many of you know how I trade. You've got a feel for this particular stuff, and traders are always asking, does this data push the Fed closer to rate hikes or cuts? That's the heart of every NFP, guys. That's the only question that professionals ask themselves. Is the Fed likely to hike the rate or cut? So it's not just about jobs, it's about the future interest rate bets. So yeah, we're kind of betting what the Fed will do with those numbers. So let's look at this week's fundamentals, the build-up before we had that number coming in. We had if you scroll back to the start of this week, that is Monday, we had a bank holiday for the JPY. Let's try and unpack the storyline, right? We had very important news on Wednesday. That is the FOMC, right? Where is that? Where is that? Let's see. Today's Wednesday. Yep. Where is that? All right. That date. You see, if you're using open source sites like Forex Factory, that is a big problem. Sometimes there are glitches because of traffic. You don't really understand or see the data. But if you go to the official website, the US Bureau of Labor Statistics, you'll be able to see the data. And a very nice way to say it is the economic calendar over here. And we are looking at, let's see, 5th here, Friday. We had job openings and labor turnover survey. We had productivity and costs and the employment situation. Now, on Wednesday, the Fed kept rates unchanged, right? But Powell's tone, if I'm not mistaken, was balanced, meaning he was kind of acknowledging cooling inflation, but warning that labor remains too tight. He was warning, actually. And the translation that I got, you could go check this out on the official YouTube channel. They usually have live speeches. What I kind of picked from his tone was they're watching this NFP before deciding what's next. Now, don't forget we are in Q4. It's very important as well because we have seasonal tendencies and you want to keep that as well in your mind. What usually happens towards the end of Q4? We're looking at Christmas, we're looking at New Year, and these factors affect the markets in one way or another. We had the jolts. That is job openings and labor. Now, that dropped. It dropped again. Fewer job vacancies signaling a cooling market. We also had the ADP non-farm employment change, which missed focus. Right, the focus was 32. It came slightly higher, and just giving you a sense of fewer private sector jobs added. Nothing really much there. And then we had ISM, manufacturing PMI. That was slight recovery. As you can see, we had 52.4 from 50.7 forecast and 50, meaning we had 2.4 added, which, it's still under a little bit. 50 is like the neutral zone. So we could, in economic terms, we could say the contraction zone. Now, what is this market takeaway? If labor is cooling, right? Inflation easing, but not enough for cuts yet. So my assumption is if we could, depending on this NFP, and I'm trying to see this, we have employment and unemployment. Okay, let us see what we have here. Okay, let's go home, check out what's happening here. So we have latest releases. Okay, there we have it. Schedules, release calendar. Okay, what's happening here? What is happening here? What is happening? My internet looks like we're having a proxy issue here. What would be the problem? What would be the problem? Okay. Let's refresh the page. Let's try and refresh the page. Okay, nevertheless, we'll move forward. Publications, economic daily. All right, non-farm payrolls, employment up to 20 states. September. Okay. We are in November. Okay, so I'm going to I'm going to refresh this page and see what's really happening. So we have some news coming in that I'm going to skip that. We don't have fresh data coming out at the moment, and that will not stop us from moving forward. So anyways, if it happens that we have a strong NFP, all right, it could kill a rate cut, hops, and pump the dollar. While if we have a weaker NFP, we'll get the data coming in. That will just simply ignite risk, appetite, and boost gold. All eyes are usually on gold on Fridays with NFPs. And now let's just talk about how to trade this monster. How do you trade the NFP? So we're not guessing. We're just trying to structure and position ourselves in a way that we could take on the wave. So what I like to do is I like to have a 6-step framework, and I'll pin that PDF for you as well, so you could go step by step. The first is bias mapping. I like to map out what's happening. I like to look at dovish biases this week. For example, we've had a weaker ADP and jolts, but keep an open mind, guys. We're keeping an open mind always. Markets love to trap pre-positioned traders. Now, after you've identified your, once you've identified your levels, okay, this graph doesn't really look very attractive. So we'll stick with the Canadian dollar for now. Okay. Yeah, once you have your levels, move to the lower time frames. You want to move to the lower time frames and see what's happening over there. Keep an open mind. Markets love to trap you guys. And once you've done that, you've mapped out your biases. We have a zone marking. Identify daily and 4-hour levels. Okay. For scalps, I usually use 30 minutes and 15. Just identify them. Again, I've taught this multiple times. You might want to check out some of those videos. And once you've identified your levels, where the liquidity is, and where the path of least resistance is, all right? If you don't see any liquidity zones, you might want to take it easy. Now, from here, we could see that prices moving up. However, on the daily, we still have a consolidation. We had an extra purge up there and back to the zone. So that would be a fake out for the time being, right? You don't want to miss that. Now, once you've done that, just map that out, the key zones and equilibrium points. Today's we have an equilibrium point from the high to the low, right in between there. I break it down from a 15-day to a 30-day period. Now, reaction discipline. The first 60 seconds, noise candles, you want to avoid that. I stick to about 15 minutes. So you don't do anything for 15 minutes and try to understand what's happening on the other side. Unfortunately, we don't have the data, and this is starting to get to me now. I'm trying to understand why don't we have the data. Now, you might also want to check the official Twitter or former Twitter X accounts and see what's happening over there. So today we don't have any releases, and I want to believe this is because of the government shutdown, but we'll see later on. Okay, then we have confirmation setups. Depending on your strategies, check out my YouTube channel. I have explained all the strategies that I use. Use the indicators very well. Look for momentum. Understand where volume is. Get all that off the table. If you're using momentum indicators like the RSI or MFI or order flow cues, that would be also a nice one for a Friday. And the execution part, short-term options, I use options all the time when I'm doing this kind of quick in and out. And you could use on your 10-minute, you could keep it at 15 seconds. It's not a bad one. 15 seconds inside and out. I call them micro scalps, and we can only do this when structure aligns. And risk logic as well. I'm going through what I use. The risk logic, I use 1 to 2%. Pocket Options has a beautiful calculator here. You just say 2% and it translates it to the amount. Now, this brings me to the martingale strategy. Please get your free copy in the pin messages in my Telegram community. Here you want to put your amount, your total capital. For this particular day, I've segregated some money. That way you help preserve your capital. Let's say you're using 15,000 for today. Some of you have 1,000, some of you have 1,000,000, whatever you're using. Just put it inside here and look at the stakes from 1 up to 5. We have the fast try would be $300, and then depending on your loss or your payout, you keep increasing it. You could double it until the 5th trade. So you could break this down into 5 trades. Now, depending on your risk appetite, you want to use this very carefully. It's a very good strategy, and it's based on probability. It's a very nice one for these kinds of trades. So as you could see, we have $300 start. Yeah, it's pretty much 1 to 2%. 2% exactly. So you're going to risk $300. Depending on what you will get, or depending on your P&L, we'll decide to increase or decrease. As simple as that. NFP doesn't reward the fastest trader. Remember that. It rewards the calmest mind. Your mind has to be calm. Do some kind of meditation. I particularly like to run, and that kind of cools me off. All right. Now, after you've mapped out your battlefield visually, okay, don't forget to check out the other confirmations like the monthly performance heat map. That is a good one. In this case, if you're trading USD card, just go to the currencies here, and you want to look at the USD card. Seasonal tendencies for it. You try to check that out. Look what happens during these months. So currently we are in November. We see that the 20 graph is aligned with the 15 and the 10. Like it's on a low. It's showing a downward trend. Now you want to check that out on a bigger time frame to see where we are going. All right, we're still in consolidation. Now, the more you do this with other instruments, the easier it gets, right? This becomes part of you. You start to see things differently. You start to predict and have that intuitive skill that I always talk about. It's a skill that you get after a long time of practice. I cannot explain this to you. You have to practice it by yourself. I'm just giving you an overall general kind of mapping on how I trade the markets. Seasonal tendencies are very good. You want to check out the performance leaders if you're doing some kind of correlation analysis. And if you're looking at the Canadian dollar at the moment and Japanese yen, sorry, we're doing USD card. USD card, where are you? USD card, where are you? Should be some. Oh, there we have it. As you could see, it is It is in the red. That is another confirmation. Canadian dollar. Okay, what do we have here? Canadian employment came out 60. So change in the number of employed people during the previous. Okay, so we have good data coming out for the Canadian dollar, and we have some more confirmations here with performance leaders. We're gonna go short with that overall. Now, regarding the Forex map, market map, you also want to check out where we have the US Canadian dollar. It's generally red, all right, and that clearly illustrates what I'm trying to say. Now, these are some of the ways of doing analysis, but you want to keep in mind that we have a lot of analysis, and it's very important when you're free on a weekend, go over it, check out what I've been teaching, look at the court data releases, CFTC, go and look at backtest these things, understand what the bonds are doing, the treasury bills. There's a lot of interesting insight there. You can also look at the volatility index, look where you are at the moment, don't just rush. This goes for the advanced group and those that are looking for longer swings. We're looking at a week. If you're trading for long term, say holding positions for a couple of years, you want to keep that in mind. This will give you a better way to exit, right? Very important to know when to exit. Your entry is as important as your exit. So with that being said, guys, there's a lot of nuggets there that I've just put out there. You want to take it easy, ask questions. We go through this every day. It's a full community there, full of dedicated people that want to learn. All right, guys. Now, gold. Okay, we're sticking to USD card. The emotional mirror. Let's see. Emotional mirror is gold. Okay. Nothing really big at the moment. Look at the psychological levels. Watch these psychological areas. Oh, we got some pumping going on here. All right. Not bad. Look for it, liquidation, and fine. So market is not yet reacting. Now, for the sake of just showing you how I do it, we've had an incredible week. We've been super profitable. We don't need to make any. We don't need to rush, is what I mean. We have a double bottom right there. You could see this little wick out there taking out liquidity on the 30-second. You pull it out to a 10-minute, a 15-second, and it's very clear this was a pullback. Structure is getting broken. We have the moving average showing it's an uptrend. We have a cross in the MACD and red low volume. Most of the indicators lag, and you want to notice how institutions absorb retail panic. It's very important. These are all signs for you, okay? This right here and say a 10 pip range, you want to keep that. Look at support. Look at how price is reacting. Now, this is what they call price action. You're reading price action. This is how I look at the market. This is the kind of ideas that run through my mind when I'm trying to break down. You want to break down the market psychology, and that's it, guys. Simple as that. We're getting into the last 10 minutes of my stream, and if you want to decode psychology behind any move, you want to understand that institutions are out there to cover their positions. All right, institutions short, they risk early and they like to cover. Now price is starting to move. I like this. No spikes. Exactly how many minutes now? Okay, we're getting that strong pullback. And price is right at equilibrium. Now we could actually be moving up all the way to the previous open, wicks open, and that could finish up with probably another pullback. Let's see. Yeah, NFP is the ultimate mirror, guys, for the USD. It reveals how fear and greed react in milliseconds. Let's see. Do we have any news coming out again? Nothing. Employment projections. Latest release. Consumer pricing. Yeah, we looked at consumer price index last time. Let's see if we could see if we have non-farm payrolls. Let's see what we have here. All right, tentative. All right, not bad. Tentative. So yeah, I think this data we'll have to just do some more research off the live stream and understand what's really happening. Yeah, don't chase, guys. Don't chase anything. Look at gold. Compare what's happening. Gold is falling down. USD is going up. That is very evident. However, I want to draw your attention to this data. CAD is strong, but for some reason, it's on a micro time frame. It's showing weakness, and with the 7.1%, we see that the forecast was 7.2. It came out short. It remained the same, not so bad, and from minus 65 all the way to 60. A very important one is towards the end of the year, we have more employment coming in. People are out there working, and it has another impact on the way markets are read. Now, after you've done all that, you want to zoom out for any continuation setups. Here's the move that we missed. We saw the purge right there and the move up. Now, you might want to just bring in a FIB to get more confirmation. Where is that? We had a FIB somewhere here. There you have it. Okay, so we had a low there, and we had another low here, and our high right there. Okay, and we're looking at the sweet spot here. We have a support here, we have that, and we have strength coming in. All right. Fine. So what we're going to do is we are going to have this psychological area here that I assume other traders are looking at, because there's some support here. And we're starting to see the exhaustion here. We might get another. All right. This is a sweet spot I'm going to get in. And once we have price in there, you want to check out your risk and just go in. Simple as that. We'll have 1 or 2 trades today, and I'll show you how that is done. Keep an eye on the other pairs and see what's happening. Keep an eye on all these other pairs and try to make these you have to be very fast at decision making, and you have to cut your losses as soon as you see something going far. All right, there we had it. We missed it by a few. So now we know that this area is very sensitive, right? We see that price is making higher highs and higher lows. This is what we want. We had a high, another high, and now this is a higher low. However, this candle on a 30-second could be contradictory, say on the 15. Yeah, on the bigger time frame, we're having equilibrium areas right there. All right, there we have it. And we could get another pullback. Let's create another little triangle here. We're going to make another triangle here. Now, please integrate some of the strategies that I put out there on my channel. We have very, very nice ones as well. You want to keep that right there. And always remain open-minded, guys. Remember, we're in a consolidation in a bigger time frame, and we want to take advantage of any move there. You could see prices reacting. So that is a very nice area. And this trade should work out, guys. It must work out with a 15-second time limit. How much time we have? We have 4 more minutes. Let's see what we can get in the next 2 minutes. Yeah, price surely wants to move out with the New York coming in. It's 8:59. It's coming to 9 a.m. and that is the sweet spot. Once we have momentum, you just get in. Oh, we missed that move. We really missed that move. Okay, once a move is missed, you just need to move on, all right? You have to have strict discipline on understanding some of these. Now, it will keep printing. It will keep printing. You have to understand the range. Usually, I use the ATR. There's another one that gets me the time frame ATR. Okay. Let us remove these Bollinger Bands. We don't need old ones. All right. So we have the ATR. We are looking at a range. You could change that range to a period of make that 7. Many stick to 14, but if you're using a 1 minute or 10 minute, you have to reduce that ATR just to get a quick glimpse of what's happening. If it's overbought, then you want to see that, oh, price is coming back. Amazing, amazing. The MACD's confirmed. We have the ATR as well confirmed. And let's see what's happening elsewhere here. Has anything changed with the performance? Oh, there we have it. We have more change there. US Canadian dollar. All right. Now price will surely come down. This was a fake one, fake up. We've had a low high, high low. It's printing. So you could also read tape. Those that have worked in institutions before, candles are just honestly scalping. You're just scalping in and out. You could learn to read the tape very well and try to understand market depth. You could read about that. I have master classes on this, reading market depth and liquidity depending on the pairs. There we have. I like the candle structure. And what you want to do now is have another resistance line right here. Have another resistance line and see how price will react there. Okay, now while we come to the end of our session, keep an eye on the time. Once it's 9 a.m. In New York, we're having 2 p.m. in London after lunch. And yeah, that is pretty much the nice momentum sweet spot that we want. And excuse me, yeah, that's it. If we see any kind of strength, we'll be going in. Now, I will post I'll post my full breakdown in my Tony Trades community, Telegram community, right after this stream. Okay, for those of you that will join, I will provide the signals. Come and join. Use the link below, and once again, try and use this promo code to get 100% bonus and trade with us. All right. In my PDF that I will send, I'll have a pre-news checklist, a candle reaction phase. All right. What does my continuation map look like? I like to call it the Tony continuation map, and some live examples of past NFPs that we've been breaking down. So what a session, guys. I've given you an idea of how I trade, what needs to be navigated. Remember, these are very high volatility days. You don't want to get stuck while going into the weekend. We've learned a lot, and just try to go back to this video once it's done on your free weekend, and try to get the concepts, do a deep dive, ask questions. I'll be more than glad to answer. It's been a pleasure. There we have it, guys. We will definitely get this trade. We will get this trade. In the meantime, maybe we could have some music, probably have some music while we wait. You can actually set some limit orders, right? Limit orders, we have 5 more chances, guys, depending on your risk appetite. You don't want to blow any chances. So this is how I do it. So one of many ways that I do it. So this might take some time. It's a Friday. We don't want to waste anything, guys. We made a lot of money this week. There's no need to rush, guys, honestly. Just for the sake of showing off, maybe I could make a few trades, but there's no... Oh, there we have it, guys. Okay, now we are getting into the zone. You just want to press a buy. I went in late. But let's see. And I made a mistake again with the 1 minute. All right. So this is a very good example, guys, of what kind of mistakes you can have. Always ensure that you've set up everything. Now, this was supposed to be a 15-second trade, and there I had it with a 1 minute. Now, this is not right, okay? 1 minute usually is a little bit complicated because for this particular strategy, 1 minute is too long. You cannot be messing around with a 15 second, 30 second, and you're trading 1 minute. However, we still have a good chance of let's see how that will go. We have boom. Yep. All right. This was not good. All right, not bad. $300 off. And that is fully on me because I had to put a 15 second. Now we move on to 760 backs. 760 backs. That is about 5%. Now this is if you're using the martingale. 15 seconds. Have the buy there. Let's see if we could make it all back. 9 seconds. 4 seconds, 2 seconds. Yeah, good. So $1,300, wonderful. So as you can see, we've made back the $300 and we have also added. So you want to journal that as well. Journal that, put it in there, and you move to the third level. That is 1,700. Now this is for those of you that have high risk appetite. And depending on your strategy, you could make a decent amount. We're looking at 5% every other week. So yeah, we're going to call it quits for today. We've done 2 trades. One failed and the other got back our profit and some more. So 300 backs for just a quick in and out is not bad, guys. Keep your discipline at top notch. You don't want to mess up anything. Once again, thanks. Come and join me. Check out my social. Subscribe. Instagram, TikTok, Telegram. Smash the like button. Share this stream, and set your reminders for next time because every Friday we do have good streams. Ask questions. We didn't have any questions today. That's it, guys. This is Tony signing off. Stay